Hi, good morning, and welcome to today's edition of Market Analysis for today, Friday, the 7th, October the 7th. I'm Giovanni Banacor, and I am an educator and trader with Vantage Markets. Well, imminently, in a few minutes, in a few seconds actually, there's a key U.S. jobs report dropping in. It may seem like non-farm payrolls have been a biggest macro data point since the consumer price index has taken the spotlight all year. But the September report is of particular importance. The Fed will be watching very closely for signs that the labor market and thus the economy is cooling off. Feeding into its decision making over the path of rate hikes, economists are expecting 250,000 new jobs added in September, which will be down from 315,000 in August. Now, the jobs number is coming out in a few seconds as I'm watching right now. So the wire. Let's see what that number will be. So if we're expecting 250,000 and we get a better number than that, that could be bad for equities and vice versa. So the number is actually 263,000 new jobs in September. So that being said, it isn't that really that much. It's only 13,000 more than the expectation was, but we could probably see a short sell-off in equities. As at the same given time, we have seen how crude oil has reached a nice resistance level of 90, psychological level of 90. Now, this also will give us another indication that we need to turn our attention to the dollar, which isn't done rising yet. The surging US dollar has yet to peak. The Federal Reserve is unlikely to start cutting interest rates anytime soon, keeping the dollar rising against rival currencies globally. The greenback has already flown up 16.7% this year, bolstered by Fed rate hikes and weakness among major counterparts. But hopes of a pivot in the Fed's policy pumped the brakes on its rise recently with the US dollar index, now which measures the buck against a basket of six currencies, retreating on speculation fueled by a fall in US job openings and a lower than expected rate increase in Australia. Now that last word or that last sentence, fueled by fall in US job openings, well, hey, here we are, a better than expected number, and the unemployment rate is still at 3.5%. So we could probably see a continuation of the dollar being strong, and obviously all the currency baskets retreating from here. Now, it is too early to call a peak in both FX hawkishness and the US dollar. The number of job openings in the US remains much higher than those unemployed, while the latest core personal consumption expenditure price index showed that inflation is still elevated. Now, Fed officials, including Mr. Jerome Powell, have stressed that the central bank job is not done yet. So, against a backdrop of global uncertainty amid the war in Ukraine, the pressure weighing on the euro is likely to prop up the dollar in the near future. The monthly job report today is the insight into the labor market and what the Fed might do and the likely future path of the dollar. So that being said, the August job gains unrevised is still at 315,000. So we could probably see a sell-off in the equities today. Now let's take a look at what's happening indeed, and that's why we're seeing that we see that the equities in a sell-off is dropping off. 11,300 is my support. The RSI is almost coming into the oversold territory, but that could just continue to fuel this rally. Most likely, we'll probably just continue to see this sell-off. It down to 11,000 later on today. Look at this! Wow! Look at this! This candle, this movement. This is just really strong. The crude oil, okay, has also made a little movement. While Nat Gas is looking to stay around, holding steady. Then we have here Bitcoin. Bitcoin has taken this fluctuation really crazy. This is maybe this also could be done because of what happened with that hackers taking about $100 million worth of cryptos last night. So that could also be another indicator. And And look at gold. Gold has retraced in 1700. That's the support level, psychological support level. Should we break this level, we're gonna continue to move even lower, even further lower. Here we have silver. Silver is also moving, has made a really strong move to the downside. Look at copper. Oh boy, copper is violating the support level of 340. Most likely, it will. I'm looking at the RSI. It has some more room to drop. Then we have here the euro. Or euro is really gonna break my support. I'm looking at euro to break the 0.97 support level, psychological support level, and probably most likely come down to take out this previous low. Okay. Then we have here the US dollar, Canadian dollar. Let me take a look at the 30-minute and take a look. Come on. All right, what happened? It's not loading. All right, let's take a look at the dollar index. Dollar index prepping up to make another attempt to the upside. All right, I'm looking at the dollar index 113 and a half for today. Let's see if this loaded. Okay, it loaded. All right, fantastic. All right, so since we saw the crude oil hitting that high, then we probably see a retracement. Or we see a retracement here on the Canadian dollar down to the 52-week moving average as acting as a support right now. Well, that's it for me today. We're going to be seeing a continuation of a sell-off into the day, perhaps just at the beginning, and then let's see if the market will stop this carnage before the day ends. Let's see what happens. Have a nice one. See you Monday.